Afternoon, how are you all doing? Sorry, late again. Always late. I get here, I send everything out and say I'm coming online, and then I sit here for ages, getting engrossed in something, and I completely forget. I forgot to go online. How are you all doing? I hope everybody's still alive. Swiss franc and New Zealand dollar and Aussie dollar, absolutely squeezing the crap out of everything. Anyway, afternoon, Amy, Kenley, John, Monkey, Emac, Peter, Neo, Jerry, how we doing? David, afternoon. Hood guy. Hood good guy. I've got no uniform on today as well. It's non-school uniform day. Afternoon, Danny, Virginia, Dion, Julio, Fletch, AZ, Jenky, how we doing? Gregors. Yeah, wasn't here this morning because I had to do the school run this morning, which was fun. Came back to a nice profit on the DAX. So really nice, easy breakout on the DAX today. Where's my pen gone? Oh, I'm really organized today. Not. So I'm just getting stuff. Where the hell is it gone? The pre-market range today, doesn't really matter which one you took, 5, 10, 15, 20, whatever. It broke really nice and clean, straight down to 2R within 10 minutes. But then we just went nowhere all session. So again, another sideways session today. So we'll see what happens with the indices for the US. But these markets at the moment are just stuck, really stuck. It's hard to get any... I don't think we've had a trend today on anything for ages. We had a bit of a trend day there. That was just a collapse. Bit of a trend day there, I suppose. But most of the days are like just either whippy moves. Everything kind of goes in an hour and then it stops. No nice, easy movement anywhere. It's really annoying at the moment. But we'll have a quick look at where everything's potentially going to go. We've got 5 minutes to the open. Let's just quickly cover news first. We had this morning the pound retail figures. They came out as a negative, a very big negative as well. We were a plus 0.4, forecasting a negative 0.3. We got a negative 0.9, which is quite a big drop. We had a little bit of negativity this morning off the pound, but not really done a lot. Again, market not reacting very much to news at the moment. There's a lot of... volume coming into the stock market all of a sudden. Really jittery, like flicking up and down a lot. Hezbollah saying they're targeting Israel. Parker is speaking at the moment as well. So it's probably to do with what Harker's saying. So news-wise today, we had that. We've had the retail sales for the Canadian dollar came out as a plus 0.1. Forecast was a negative 0.1, so it's pretty much as expected. So no real movement on the Canadian dollar there. A little bit of weakness off the CAD, actually, but nothing particularly dramatic. Apart from that, that's it. There's no other news this afternoon. Obviously, we've got Harker speaking at the moment. Overnight news wasn't really a lot. I posted in the Telegram group what I saw. Sorry, just like some scammers just entered the group. Somebody enters the group with the name KTS Money Heist Spike Pro. It's obviously some scammer trying to sell some scammy bot or something, isn't it? But overnight we had nothing much at all. Lots of talk from Japan, no talk about FX, interestingly. We've had Bostic talking about cutting rates, but not until 2024. And Harker repeating, we're going to hold the rates. So no increases in rates, but they're not going to cut rates until 2024, towards the end of 2024, they say. So they reckon they're going to hold the same interest rate for about 9 months. I think they're probably going to find that quite tricky, but we will see. So that's news. There isn't any more today. Just keeping an eye on what these markets are doing. Just quite a bit of volume coming in at the minute. So from the Dow Jones perspective, obviously we are at this previous monthly level. Now, this previous monthly level has been invalidated already. So it's kind of not really valid anymore. It's this low here, which we bounced off of. We broke through it. We came up through it. You know, it's gone. So ignore that blue line there. So looking at where we are now, there is a downside support, which is where we gapped down to on Monday last week to the downside. And then to the upside, you're looking at yesterday's high, which is 125 ADR away. There is this low here, which we did respect a little bit yesterday. But again, we flip-flopped around through that now. So I'd probably say that's gone. So really upside today, 125 ADR. But downside, you haven't got far at all. So watch this low if we break to the downside on the Dow. S&P, we're sitting on previous support that I've drawn in. So this is a line I've drawn in, which is exactly what we're sitting on right now, which is this previous support back here. Yeah, it's this level here, which we tapped into. We sat around a bit. So we're just sitting on this level at the moment. Downside on this, you're looking at a flush all the way down to ADR. Upside, you're looking at a pump all the way up to ADR 125, which is yesterday's high again. So there's tons of movement upside, a lot more movement available downside on the S&P. NASDAQ is also very similar, plenty of downside towards ADR, towards these lows, and upside 125 ADR. So basically, if we break up today, there's nothing really to stop us until we get up to yesterday's high. So it'd be a case of, is there enough bias to rally us up there? If we drop, there is support to the downside on all the instruments at the moment, but the Dow is the closest support. So we need to watch what they all do when the Dow gets down there, if it gets there. Got 1 minute to go. So yeah, we'll see where we go from there. Wait for the markets to open. Afternoon, Paolo. I'm well at the moment. Wife's got illness, so I might get illness next week. You never know. New Zealand and Swiss are hurting me more this month than the CAD Swiss did last month. Yeah. Big squeezes on those at the moment. We'll have a look at those in a minute. Afternoon, JC, Baggy, EMAC. There was one mention of FX from Ueda. Yeah, there was I won't go over to it now. I did see them mention FX, but it wasn't about intervention, and it wasn't really so much of a case of we're watching close type thing, which is what they usually say. So they did mention it amongst everything else. There was a lot said about from the Japanese, but yeah, not a massive amount said. Blimey. So Dow Jones, no trade taken on that. The initial pre-market range is a little bit too tight today. That's broken to the upside, or trying to. S&P and the NASDAQ taking a pre-market break on those. I've got a slightly wider entry on the S&P than I have on the NASDAQ. Short NASDAQ. Oh, Jesus. I just got slipped to death on my other account. Proper slip to death. Jesus. 3 pips. I got 3 pip slippage on my other account. So short on the NASDAQ. No entry so far on the S&P. Lot of volume coming in. This thing's live today. Harker is still talking, so could get some reaction to what he's saying. He might drop a big one in a minute and get some big movements. Afternoon day trader, Marco, Brian. We must carefully watch financial and FX market moves, along with the impact on Japan's economy and prices. Yeah, that's basically what they said. So that was more of a general, we're going to watch everything in regards to its impact on the economy and everything. But it wasn't specifically, we are very carefully watching FX moves. What they normally say is FX movements against our interest or whatever is undesirable, or something along the lines of something being undesirable. Last night they were just carefully watching stuff, so it's a little bit less aggressive what they were saying about it. But we did get a spike today while we're waiting for this to do something. New Zealand CAD ADR, we'll look at these in a sec. We did get a spike on the yen this morning again, so another spike down. Yeah, so this was a very, very quick move, very, very quick undone. Yeah, same as we had yesterday. Very quick move, not yesterday, sorry, on Tuesday. Very quick move, very quickly undone. I've been and shown this example before to you, but I'll show you it again. Before we get an intervention, we usually get a warning shot. Yeah. Yeah, so we normally get a warning shot before we get the move. So read into that what you will. Doesn't mean it's going to happen, but yeah, that's a pretty big move, isn't it? And it was a lot smaller today, the move, but this is indicative of large order placement. Yeah, so they're just dumping orders basically and eating all the liquidity up. So it looks to me like someone's getting ready to make a move. Whether or not they can hold it, whether they can stick it or not, will remain to be seen. But we are up at that 150 level again. Look. Yeah, this is not what they want. But we've been sitting here now for over a week. So we pushed up, filled the propulsion gap of the initial intervention move, and we've sat here for 1, 2, 3, 4, 5, 6 days now, ever so slowly grinding away until they go, right, stop it. Still don't mind having this short on. Although it's just costing me so much in swaps. It's a nightmare. Can't really get any movement out of the downside on this NASDAQ. So it's a fairly decent break. The sellers are holding it, but they're not able to make any progress at the minute. We're just kind of running into a very large wall of buyers here. So is the S&P, and obviously the Dow. They bought the crap out of. Oh, I haven't looked at earnings today. That's not it. Where are we? The 20th. American Express and SLB. We had Intuitive Surgical Aftermarket. So nothing particularly exciting there. Amex remains confident in their ability to achieve previous guidance. It doesn't look like they should have released that pre-market unless they just haven't reported it in here. But yeah, that's all we got today. So not a lot today. First big day is Tuesday next week. That's when we're going to get the biggest moves. Big move down starting on the US dollar yen. Okay, so the US dollar's dropping, so we might find we get a bull rally on the indices. See where we go. Okay, so there's your 5-minute ranges in. So pretty much an inside bar on the S&P. If you took the pre-market on the Dow Jones, you've probably hit target, and you are at the pre-market highs as well. NASDAQ, as I said, we're just running into buyers down here, so can't make any progress at the minute. DAX is rallying nicely, look. So this morning on the DAX, because I wasn't here to watch it this morning, I reduced risk down by half, and I took both TPs off down there. So I literally just got out down there today. Hence it's only $740. But because I wasn't around to watch it, I just wanted to make sure that if it broke, it was just a clean break and bank it, which is exactly what it did, which was lovely. But I'm glad I did as well, because if I had done 2 halves on it, the second half would have just stopped out a break even anyway. Because it pulled straight back. There we go. There's the spam. Told you. Delete. Oh, no, hang on. Let's just delete that. Delete it. Just wanted to remove him. Bye-bye, spammer. It's so obvious when people come into the group with a name like that. They are just going to try and pump some shitty product. All they ever do. Telegram's awful. So is Discord, actually. Discord's just as bad. People pumping crap. Right. NASDAQ's pulled back up inside the initial range. Long on the S&P. Not taking a break of that. It's far too big. That range is 960. It's above 20% of its daily range. So I'm not taking a break on the Dow Jones. So got one long, one short. So if we do get a break, one will hedge and one will go into profit. If we get a whipsaw, obviously I'll just hedge both. See where we go. Banhammer has officially come down on him. Didn't last long. I'll probably get a load of abuse now. When I block people like that, and they usually send me a load of abuse and swear at me because they don't like being blocked because they want to sell their crap. Same broker with the slippage. Yeah, it is JC. It's the same broker, but a different account type. This is an ECN account. That is a Prime account. The Prime account, I got slipped on. The ECN account, I didn't. But it does. They're obviously different liquidity pools, obviously. But the Prime account is to do with being on an A book and a B book, basically. I think one of these is on an A book, one of these is on a B book, because we get different execution. And I also get a lot more disconnections on the ECN account than I do on the Prime account as well. But brokers. Just brokers. Afternoon, Hamza. Just send our friend a nice little goodbye message, shall we? And block. That annoys them even more. You send them a load of messages telling them they're a scammer, say goodbye, and then you block them so they can't even contact you. It just drives them nuts. Well, it'd drive me nuts if I was a scammer and I couldn't get my own back. Good fun. Just about to get hedged on the NASDAQ. Dow Jones, S&P struggling to get out the highs. Another just whippy session again. Haven't got that triggered, and it's pulling back. These opens this week have been really whippy. We've had some really whippy ones, haven't we? This market's scared to death at the moment. They really just don't want to put anything into anything, although they want to. I think the problem is at the moment, the market wants to buy stocks because we've got loads of earnings coming out. And next week, we've got all the big earners potentially going to release their earnings, which is going to obviously rally the stocks. So people want to buy, but you don't want to put money in the stock market when potentially there's a huge conflict about to kick off, because the first thing you're going to do is sell all your stock and put it into something safe. So we're in a fear. We're in a bit of a weird situation where we're in a fear sort of regime. However, we're going into earnings fortnight where you just want to buy a load of stocks because you can make a lot of money very quickly. But market just seems to be totally uncertain at the opens at the minute. There's no speculative moves kicking off. We just seem to get a lot of volume coming in, but no direction. Okay, so there you go. Nice little bit of slippage there as well, look. So one order placed there and one order placed there. So hedged on the NASDAQ, long on the S&P. So I would like a break to the upside, please. So S&P, we've got this big propulsion move here. that we may potentially find sellers at, but that's above target, so that's good. NASDAQ upside is pretty much the same as the S&P and the Dow. They're all pretty much the same today, so upside in that propulsion gap if we break it, but looks like we're just whipping at the minute. Is the economy just summed up by moving money around then? Not the economy, no. Economy is a very complex thing, but markets are just moving money around. It's all you're doing. All the markets are really. There's three main types of market that the banks are in, which is a commercial transaction where you just get told to place orders in the market because people want conversions done in FX and they want to buy stocks and all that sort of stuff. You've got the longer term investment moves, which is like your pension funds, your hedge funds, where they're buying for long-term hold. And then you've got your speculative moves and your prop desks, which are trading short-term. So it all is about moving money. If you want to buy a load of something, there's an infinite amount of money. Yeah. So it's the banks and institutions have got pretty much unlimited wealth, but that wealth is other people's. So when you're an investor or an investment fund or a pension fund or a hedge fund or whatever you are, you have a limited pot to play with. So when you want to move your risk from one place to another, you have to remove it from one place and put it somewhere else. So if you've got a $500 million fund and there's a war about to kick off and you don't want it in a risky asset like stocks, you will pull that 500 million or a percentage of that 500 million out of the stock market and you'll put it into something else like bonds, gold, an FX, safe haven like the Swiss franc. So when one thing rallies one way, something else usually drops, which is why you see when the stock market pumps, the US dollar drops. When the US dollar drops, the stock market pumps, and vice versa, the other way around as well. So if there's a massive rally in the US, you'll find that people will pull money out of the stock market to put into it. So money is moved around. This is what FX movement is. And while you get squeezes like this, for example, the New Zealand dollar Swiss at the moment, why this is squeezing. So this is squeezing harder than most for two reasons. First reason is we're buying the crap out of the Swiss franc because it's a safe haven currency. So we are buying this because we know our money is safe there. And there's a war coming on, which means we don't want to have it in risky assets. At the same time as this is being bought up more than normal, this is being sold more than normal because the market's just piling out the New Zealand dollar. It's a commodity stock, so they're pulling out of it. So what you're finding is this is coming down while that is going up, causing this to come down twice as fast. If we were buying the Swiss franc and everyone was buying commodity currencies like the New Zealand dollar at the moment, what you would find is it would do that. Because if you've got something being bought and something being bought, it can't go up or down really because one of them is pushing against the other. So it goes sideways. So when you've got other things like the US dollar and like gold, for example, this is why gold puts in these stupid moves. Yeah, gold is priced in US dollar, right? So that was a 300 ADR move. The reason it was a 300 ADR move is because if you want to buy gold, you have to use US dollar. So what do? You draw money out of the US dollar and put it into gold. This is priced in US dollars. So what you're doing is you're pulling out of this and putting into that, meaning that moves twice as fast. If you looked at a cross between gold and the pound, it wouldn't move anywhere near as quickly because you're not pulling money out of the pound to buy gold. It's all, everything is interlinked. There is a finite amount of money out there in here and it will move around. Which is why you find something when we get an intervention from the Japanese. The Japanese have the vast majority of their wealth stored outside of their country and outside of the yen. So they hold an awful lot of US dollar currency, a lot of pound currency, euro, a lot of the other currencies. They hold a lot of stocks and bonds from other countries. And this is how they make these intervention moves happen. That wasn't one, but the other one we had previously, yeah? So the reason these happen is because what they do is they liquidate all of their overseas assets in other currencies and other commodities, and they sell all of them, and they buy the yen. Yeah. So what happens basically is the yen gets a massive influx of buying pressure, causing everything to drop against the yen. And the reason it happens is because they are pulling all of their money out of the US dollar and putting it into the yen at the same time, causing a massive spike, which is why you see when this intervention happened, you'll see some of the currencies didn't move as far because the Japanese didn't have such a large stock holding in those currencies. Everything is related. Everything is across. Yeah. So this is the conversion rate between the two currencies, this price. Yeah, and so there's always a push and a pull. There's a base and a cross. We don't seem to be going anywhere at the moment on the indices. We are trying to go long. Dow's still an inside bar on the first 5-minute move. We are tapping into the pre-market highs on the NASDAQ. And we're trying to break on the S&P as well, but we can't get anywhere today. So I think we'll come back to that in a minute. I'll keep an eye on it over there. Just look like the NASDAQ's trying to go for the highs now. We might get a little pop here. Either that or we're going to run into a brick wall of sellers. I'm doing it again. I've got exactly the same chart sitting over here on this monitor. So I'm watching this and then I'm looking at that and thinking, I don't know what I'm thinking, but I don't know why I'm looking over there because it's the same thing in front of me. It's probably better if I look at the front, isn't it? Anyway, it's not moving anyway. So let's look at the FX. So ADRs today, there's only two. The first ADR hit we had this morning was the euro pound. As you can see, we rallied straight up and came straight off the highs. So you reversed, God, that was like lovely. Whoops, lovely to the pip, pretty much move at ADR there. Reversal straight back down again. So you've missed that one. What time did that hit? About 11. So yeah, mid-morning. Low, sort of 9:30ish or something that hit. Quite a lot of volume coming in today. New Zealand dollar CAD hit to the downside. Beautiful bounce straight off of ADR again. There, so another nice ADR hit, reversal. So again, potential move to the upside. New Zealand dollar very, very weak as we know at the moment. So this is due. I posted a shot in Telegram today of the New Zealand dollar and the Aussie dollar Swiss. So the New Zealand dollar CAD obviously is a really nice support area we're coming into here. We've got this area here and we got this low. So we've just gone through that low and kind of rejected it. But we got all these lows here. So we pushed down into this area. And as soon as we hit this area, we bounced out, 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 and then we made the rally. So this whole area we know is strong with buyers. Well, at least it was back then. So this may be the area that gets bought up again. Same with the Aussie dollar Swiss and the Aussie and the New Zealand dollar Swiss. So we're coming down into this area where we bought up 2 months ago. So we pushed up, we pulled back. That was a 50% retracement. We bought up there. So we slammed straight through that level. So that's gone. And now we're running into these guys down here. So this is where the buyers started the rally that lasted from August until end of September. So that's a good sort of 6-8 weeks solid buying there. And this is where the move started from. So it's likely that the vast majority are out of that. Oh my God, look at this thing. We can't, because I'm looking at it. You can't see it. So yeah, good looking spot there. I'll have a look at it again in a sec. And then same with the New Zealand dollar. So the New Zealand dollar just rallied straight into this double bottom monthly, and we bounced out of it today. So we need to see if this holds. So reversal alert is just about to kick in on the hourly. As you can see, that's where we got to. We slammed straight into it, rejected straight back out of it. Since then, we've just potentially putting in uneven W pattern reversal. So if we get that reversal alert, it might mean that we've got the buyers on side. However, we're going to need the Swiss franc to weaken, and obviously we've got nothing but news coming in at the moment about what's going on in Israel. He says, as he can't find any. But there's some, there's lots of news coming in. Hezbollah have targeted Israeli sites with missiles. Yeah, so it's all starting to kick off. This ground war is going to get going. So the question is, have we put everything we need to into the safe havens, or is there more? That's the question that we will not know the answer to until the market either does that or it continues to the downside. So obviously this Swiss franc buying that we've had has been because the market wants to put its money there. Is it there and now we can just sort of pull back gracefully, or have we got further downside? We'll have to wait and see. But that is a hell of a move. And the same with the Aussie. We've had this real weakening in the Australian dollar and the New Zealand dollar. But mainly, obviously, to say the Swiss franc strength has just been unrelenting. But it will come to an end and it will pull back on the move. So it's just a case of timing. We'll have to wait and see. So those are your ADRs. There's loads of weekly hits this week. As you can see, the vast majority of it being Swiss franc. Yeah, so Swiss, Aussie dollar, New Zealand dollar, because of the weakening. It's always one goes further than the other if they both weaken at the same time. CAD Swiss, and then we got Euro Swiss's hit. So lots and lots of Swiss franc movement. Oil as well. I've got an oil position on, which I've just added to. So I initially got into oil after the gap up. Took that one off a couple of days ago. I had these gap fill trades as well. This one here is nicely in profit at the moment. And I've just added on the break of yesterday's high with a view to taking this one off when we get there and holding this one for a break of that high and a runner up to $100 a barrel. So I'm just trying to continually get in, out, and just keep playing this all the way up, basically. Play the market structure up. Every time we reverse, take a reversal back to the upside again. Assume that we're just going to carry on going. If this conflict carries on, which is no reason why it shouldn't, oil prices are going to go up. If there is any restriction in oil supply by the Saudis or any of that area of the Middle East, oil price is going to go up. If there's a lot of military vehicles involved, oil price is going to go up because demand is going to increase. So there's nothing to stop oil really at the moment, apart from a complete de-escalation. Everybody calm down. Doesn't seem like that's happening, does it? So yeah, just buying oil on every dip. And I'm also buying breakouts. Yeah, this is the sort of thing when you've got a fundamental that is highly likely to cause something to rally. Buying breakouts, yesterday we had a massive move to the upside. We're getting gap ups as well, constantly now. Yeah, so gap up, gap fill, buy the gap fill, move, gap up, buy the gap fill, rally. If we gap up on Monday, I shall take that off, wait for the gap fill, buy it again. Yeah, just keep buying it every time it dips because it's going to keep rallying. So, and as you can see, it's trying to push down today. Look, market not interested, just want to buy it all the time. So yeah, holding oil, very nice move. So I got really itchy nose. It's always the start of a cold, isn't it? Itchy nose, not good. Indices all over the place. S&P, I'm hedged everywhere. Mess, absolute mess. The whole thing's a mess today. Can't do anything with it. There's just nothing you can do with this price action. It's just a mess. So just huge move, huge wick, huge wick, huge wick, no movement, just huge wicks, just doing that. Not a clue where it's going again. It's just like this at the minute, isn't it? It's just awful. This market is just awful. ADR highs there. ADR low is down there. So TPs are down. Excuse me. TPs are down here. Grab it. I can't. There we go. So yeah, those highs basically within ADR. Target to the upside, target to the downside down there. S&P. Target that propulsion. In fact, I might move that up a little bit actually to see if we can get a rally up towards those highs. Just got to kind of watch this today, see where it goes. Probably going to be a losing day. Not a lot really you can do with the market when it's like this. Moving to the downside. ADR low, isn't it? Yeah. So ADR to the downside. See if we get a move. But it's Friday as well. So we'll see. We might get a big sell-off, but nothing we do with it at the minute. It's just a total mess at the moment. Right, RSIs. So there's quite a few RSIs to look at. They're all 4 hourly though. So we'll see how we go with the indices, but not holding much hope for those. Afternoon, Crom. Is your weekly ADR the same as the daily ATR? You have 10 previous days. No, you use 12 for the weekly and the monthly. So on the ADR dash, the ADR is 10, the AWR is 12, and the AMR is 12 as well. So basically that's representative of 2 weeks. So average daily range for the last 2 weeks. The average weekly range for the last 3 months, quarter. And the average monthly range for the last 12 months. Yeah. So looking at quarterly, yearly, and bi-weekly. Right. RSIs. So there's only there's 3 RSIs on the hourly to look at. We'll cover those first. Euro New Zealand. So I've got 4 on this at the moment. That's annoying. I'm not going to get a 5th. Too close. Ooh. 30. It's a bit too close. So Euro New Zealand, that's just starting to come down. So that's an hourly extension. Got into this one back here when we had that RSI extension there, looking for a pullback. All we got was basically 2 days sideways, and then that New Zealand dollar just died. So we've had a New Zealand dollar basically started to die for a week, and then it died properly for a week. So yeah, extended again on the RSI. We've been embedded above the 50 level now for a good couple of weeks. So just looking for a pullback on this entire move, as you can see. So that propulsion gap, which is that weekly accumulation break there, that's where I'm targeting with everything. Euro New Zealand. I've got that target in the same place. Just going to put it there just in case. So yeah, so targeting that level there. We've got hourly candles have just updated. So we've actually now only got the New Zealand dollar CAD to look at because that's now not extended anymore. So New Zealand dollar CAD. Again, massive extension to the downside. We've had good Canadian strength with oil, and obviously we've had that move down. So 3 positions on that one. This is a really tricky position, this one, because the entries are so far apart because of the speed of the movement. But yeah, looking for a push back up, as you can see, into those highs. So I'm looking for basically a range to form. We may well come back up and retest that level. I think that's asking a lot, considering oil is going to rally. So I'm being a little conservative with the targeting on this, and just see if we can get a high there. There is a possibility we might just get to that sort of level and hold around there. So we'll see what happens. I don't think there's a lot of news oh yeah, we know we've got CPI for the Aussie next week. So we have got a potential market mover next week for the Australasian pairs. We've got Bullock speaking on Tuesday, but the CPI, which is again forecast to rise, so this is good. So it's forecast to rise for the Australian dollar. So if the CPI goes up, that will put inflationary pressure on, interest rate rise pressure on, which is all bullish. So if we get a bullish run in that Aussie, we'll get a bullish run in the New Zealand dollar as well. Oh, it's making me sick looking at it. Look at it. Utter chop fest. Literally. Mike Myers has officially entered the building. So New Zealand dollar CAD, that's obviously very, very extended as well. Paolo, is there a reason why the market always returns back to the Swiss currency as a safe buy? Because it's safe. It's just a safe place to put your money. So basically the Swiss, the main reasons are, if you look at the fundamentals, the Swiss are rich. They have a stable government. They have a sensible government. They have very little borrowing, and they have a banking system with a very low tax rate. Yeah, they have very low interest rates because they don't need to offer you loads of interest on your money because it's safe. And they have very little inflation. They're below target inflation. They always are, and nobody's unemployed. It's just a really good place to live. If you were going to invent a country, you would go Switzerland. Yeah. It's a safe place to put your money. They do not get involved in conflicts. World War III can kick off and you'll be sitting there and the Swiss will be going, carry on, guys. Won't take any sides. So if you want to put your money somewhere safe, you put it in the Swiss. Always been the case. You also put it in the US dollar because it is the world's currency. Over 40% of all transactions worldwide are done in US dollars at the moment. BRICS is going to change that, but so you've got a massive influx in the US as well. So if you want to put your money somewhere safe, you also put it in the US just because it doesn't move very far, very fast. So that is also another safe haven. And also the yen. Although you get a negative interest rate there, it's deemed usually pretty safe. At the moment, though, it's not. It's just not as safe as it used to be. So the Swiss is always going to be the one that wins out. However, because it's used as a bank, Swiss National Bank, when you've finished with being safe, you take it all out again, which is why the Swiss goes like that a lot. Yeah. So when you see all these moves that are caused by safe haven runs, you'll find they all get done. Like this one from, was it Friday? Where are we? Friday, Thursday, Wednesday, Tuesday, Monday. Yeah. So you see this run on Friday. Yeah. We're putting the money into the Swissy over the weekend, just in case it all kicks off. It didn't kick off. Okay. Pull it all out again. Oh, it's kicking off again. Put it back in again. Yeah. But it will, this is why I'm saying I'm targeting this level here, because it's kind of a safe-ish level. Yeah, hopefully that answers the question. Brian, long on the NAS? Are you? So am I. If you took the 5-minute opening range today, actually, if you only took the 5 today, you are only long. On the S&P, though, you are either stopped out or dead. The Dow, you are only short on that. No, you would have triggered long as well. It's not good, is it, anywhere? Very hard to get into anything clean at all today. What's your advice when price doesn't hit your next market reversal entry and keeps going? Wait. There's nothing you can do, is there? Right, New Zealand dollar Swiss. Wait. This is the whole point. You can't time this. You can't time anything. Yeah. You know where it's going. It's going back there. When it's going to go there, don't know. Yeah. Look at the last push. So there, we took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days, 3 weeks to get back there. Just under 3 weeks to get back there. How long are we going to take to get there? Don't know. forecast maybe 3 weeks into the future. I don't know. Took 5 weeks to get back there. How long is it going to take to get back there? A couple of months? Don't know. But you know it's going to, because it always does. It's just a case of waiting, isn't it? This is the thing. You can't time it. It's just when it wants to. Dow has just broken pre-market lows. So we've got a new low of the day on the Dow. So this might be a good area to buy it. We've been selling for 20 minutes solid. Are we going to go into rotation today, or are we actually going to break? That's the question. So short on the S&P. So I'm looking for or move all the way down to ADR today. No point in trying to get clever with it today. It's all over the gaff. Can I check EuroCAD? Yeah, we'll have a look at that. I think, no, we won't. I'll have a look at that now because EuroCAD's not on the list today. So that's just broken to the downside on the hourly. We came out of an RSI extension yesterday. Didn't get into this one yesterday because we looked at this one yesterday. The RSI extension happened, and then the 5-minute reversal alert happened too late yesterday. So the reversal alert triggered here. By the time we got there, this was not extended on the hourly anymore because it took hours, literally, for the reversal alert to go in because of the strength of that move. So we got an RSI extension, and by the time basically the reversal alert triggered, it wasn't extended on the hourly, so the EA didn't take a short. But that would have been a nice short yesterday if you got into it, but you wouldn't have. Well, if you took it manually, you would have possibly, but if you took it with the EA, obviously the EA didn't get in. But yeah, it's coming down nicely. So be looking for a push back down into these areas here. Almost there. Potentially that's kind of filled. That wick's done that. So you got a big, a small propulsion gap down there at that area. I mean, this, I would say with what's going on with oil at the moment, should really come down. There's no reason for the euro to be strong at the minute. Dow is trying really hard to get through that low, but it can't. We're buying up the lows again. Look, not letting them. They're not letting it through. Got a higher low just gone in on the NASDAQ. Really struggling. Horrible market. It's just horrible. It's not my friend at the moment. How have you not had any DD control done in New Zealand dollar Swiss? Because it's turned off at the moment. I'm not using DD. I'm not using automated DD control at the minute. I meant more in terms of your next reversal entry is set at ADR, but it flies past. Thus, the spacing between the trades gets wide, messing with break even. Yeah, that is the case. So this one here, for example, I use this as an example because we talked about this one a couple of times this week. ADR on this is 56. Distance between those trades is 70 odd. I like to get in 3/4 of an ADR apart, but that's 70. I couldn't get in. Yeah, so the first entry was taken there. Second entry was taken there because there was no reversal alert. I'm not going to get into the market if there's no buyers. Yeah, so if this comes down to ADR before you get a reversal alert, comes down to ADR. There's no point in getting in just for the sake of getting in. You can always add more positions, but there's no point in getting in while something's coming down parabolic and there's literally no signs of buyers. There's no point in buying it. Wait for the buyers to show their hand, then get in. And if the distance is that, then that's it. But this is something that very rarely happens. Parabolic moves like that just don't happen. Well, they do happen, obviously, but you know, moving more than an ADR with no signs of buying at all is not normal. What normally happens is if you get an ADR hit, what you normally get is some kind of pullback on that ADR before the next leg up, don't you? Which gives you some kind of selling pressure. or buying pressure in this case. If it doesn't happen, it doesn't happen. There's nothing you can do. When did you turn off DD control? I don't know. Not sure. Just doing it manually, basically. I want to see what happens basically with running low risk without automated DD control. So doing DD control the way I always used to, which is manual, basically. But to keep it on, you know, no right or wrong. I will go into more DD than you if you're doing DD control as you go. Just the way it works. Right, Aussie dollar Swiss. Let's go through these 4-hour RSIs. So Aussie dollar Swiss, big extension to the downside. Again, so this was the initial sell-off from last Friday. Obviously, we've sold off this week. Again, we've got now divergence there, which is bullish. So we are pulling down. We've gone through this monthly low, though, however, which isn't good. So we've got now a little accumulation there, which may act as resistance if we're going to continue to the downside. So we need to see what's going to happen with this. We've obviously got news coming up next week, which could rally the Australian dollar, which is good. Markets melting. All the stock indices are coming down quite hard. Finally, we got some direction. So going south on everything. So looking for basically run down to the lows. So Aussie dollar Swiss, again, we know these Swiss francs are all massively extended. So big moves to the downside. Aussie dollar, New Zealand dollar extended to the upside. Big rally we had off the back of the Aussie and the New Zealand CPI. It was the New Zealand CPI, wasn't it? Was it the New Zealand CPI? I'm losing track. Got the Aussie next week, so it must have been the New Zealand CPI. Yeah. So the New Zealand CPI. We had the monetary policy meeting minutes, which rallied the Australian dollar. So we had a negative move on the New Zealand and a positive on the Aussie at the same time. Obviously making that a big rally. We have got potential bullish moves on the Australian dollar next week. So this one, there's only 2 positions on this one, looking for a pullback into there, but we'll obviously see what happens. If this rallies, we'll be looking for bounces out the highs, back out of this accumulation at some point. So we're running straight into all these lows now. So you can see we've rejected it 3 times now, this low. So this may be where we basically get bounced back before it pushes up, but we need to do that by next Wednesday, CPI. So ideally we need a good couple of days worth of pullback next week on that one. That's just coming out of extension on the 4-hour. The CAD Swiss just coming out of extension on the 4-hour as well. So this is rallying up fairly nicely at the moment. Obviously, big, strong push down into monthly support. Monthly support they've bought up. So it's good to see they've completely bought that, which is great. So looking for a rally back up into that area for potentially finding resistance. So we'll see if we get a resistance bounce off of that area there. So we pushed down into that low. We retested it, tested, finally broke it. Haven't tested that area again yet. So that's where I would expect to find some sell action coming in. Whether or not that pushes down for another leg, we'll find out. But if not, I'm looking for it to push back up into that propulsion move. Canadian dollar should strengthen with oil. However, obviously, if the US gets negative news, it's just going to pull it back down again. Swiss franc, obviously, we know about the Swissy. Big, strong moves at the moment. Don't know if it's over or not. We'll find out. So we'll see what happens with the Swiss franc moving forward. Swiss yen, big move to the upside. I'm not selling. I'm not buying anything against the yen at the moment. Not with the threat of intervention coming. Everything is rallying against the yen at the minute, apart from the US dollar. And the US dollar is the one that triggers those intervention moves. So at the minute, everything's kind of had free reign to run against the yen. So this is very extended again above the 4-hour. This whole move here from where the intervention kicked in and they bought it, we've not had any profit take on that whatsoever. So look how far away we are from the 72 and from the 24. Miles away. So whenever you get that extended away from the moving averages, you tend to get quite a fast pullback towards them. So I'm just trying to find, there's not really that many good examples on this because the yen has just been so unbelievably weak. But looking for some kind of, pullback towards the 24 on that one from this level, which is where you will typically get a pullback start up at the highs. I didn't get one there, but this is all going to be down to whether or not this Swiss continuation rally happens and whether or not we get any intervention from this yen. So at the moment, it doesn't look like anybody's buying the yen. However, they're also not buying the US dollar. So we're stuck with the US dollar yen, which means that everything else can just do what the hell it likes. So as you can see, most of these pairs have managed to rally against the yen. So very, very extended. Just got to be careful of these breakouts that we've had. So we tapped into that level, broke it. We slammed straight through that level and used it as support. So potentially this is really possibly by the time you get there, the 24 catching up, we're just bouncing away. So it may not come down. We'll see. Indices still dropping. Euro odd is extended as well, only just though. So that's just coming off of a previous level. So this is basically this area here that's been respected multiple times. So getting a little bounce off of that. Not really any directional bias on this one at all at the moment because they're both weak. So just about extended on the 4 hour, but not very nice and clean. It's probably going to pull back, but not great. We didn't get any hourly RSI extensions on it basically, so there was no real good strong moves apart from that last one that I got into there, look, and got out of. So there's nothing else much on that. It's not really particularly good looking, that one. Euro Swiss. So again, the euro weak, Swiss franc strengthening up. Normally these two are fairly stable, as you can see, but obviously when the Swiss franc rallies, it just carries on going. So we'll see how far this one goes. There's not a lot of strength in this euro at the moment, so it's going to find it, I think, fairly hard to get out of this rut that we've been in for some time. Lagarde isn't really rallying the market at all at the moment for the euro, so pushing back up into previous resistance, previous support, which is where we bounced. It's probably the best you would expect at the moment. By then, obviously, we'll be coming down on top of it with more weight, potentially. And if the market continues to be scared, the Swissy will continue to strengthen. So, but it won't continue. It's not a continuous move. It's more of a pump and a dump sort of thing with the Swissy. So it will come back out again. But obviously, if you get the euro weakening as the Swiss franc weakens, this will just do that rather than doing that. So, so that's euro Swiss, not very good extension. Euro pound, that is nicely extended. It's already played out though. It was an extension above these levels for bounces, potentially to continue up. Pound just got nothing at the minute. We keep getting negative news as well, which is not helping us at all. So we had that CPI figure come out as a positive. Didn't really do a lot, did it? And then we've just had our negative retail figures coming out. So there's just, pound can't get a break at all at the minute. And Bailey's not helping. So there's just nothing really going for the pound. We've got claimant count change coming out next week. What else have we got? PMIs. Oh, it's PMI week next week. So a lot could change next week. But yeah, not particularly confident in pound strength anywhere at the minute. So that's pound, euro pound extended to the upside. A weak pound will obviously keep the euro rallying against it. But again, the euro's weak at the moment too, which is why you're getting a lot of this. Yeah, it's just, there's no strength in any of it. Euro New Zealand, we know about that one. So New Zealand dollar weak as you like. Massive extension. This has got to do some kind of profit take move soon. So not necessarily going to be massive, but we'll see. We'll see what happens with the rates next week for the with the CPI for the Australian dollar. That might rally the New Zealand. It will rally the New Zealand dollar, but to what extent, we'll have to wait and see. So we've got news coming out on that one next week, but that's massively extended, as you can see, above the 80. When we get above the 80, I've said this in here before. if you want a safe strategy, just sell above the 80 and buy below the 20. It's very rare, very rare. You don't get many signals, obviously, as you can see, but it's very rare that you don't get a pullback, because to get extended above there, you've got to have such an amount of sustained buying, and it's got to be such a strong move. And it's usually caused by some fundamental. You get a massive pullback quite quick. So, and it tends to, this is actually not a particularly good example, this one here, because that was a big parabolic move. What normally happens is the profit take move is quicker than the move. So this one took 2 weeks to get there. Usually you find it all comes and gets undone within a week. This one actually all happened in a week and took 2 or 3 weeks to undo itself. But you tend to find the profit take, the pullback comes an awful lot faster. But these 80-20 levels, usually very, very reliable. So, but you've got to still have the fundamentals on your side. At the moment, we've got a weak euro, and we've also got a very weak New Zealand dollar. But you can see how weak that New Zealand dollar is, because, you know, the euro is very weak. And if it can do that against New Zealand dollar, you see how weak that thing really is. Really weak. You need some strength on the New Zealand dollar to come through, but I'm looking for a 50% retracement on that move. We just had big sell order come in the NASDAQ. If there's any news. So we just tried to rally back up, and they just dumped that really fast then. So coming out the lows very nicely. It looks like it's moving really fast now, doesn't it? But actually, we still haven't got to 2R yet. So it looks like it's really selling off fast now, but that's only because it's been sitting sideways for half an hour. It's not really going that quick. S&P's moving fastest today. So yeah, that's Euro New Zealand. The pound Swiss, again, same thing, Swiss franc. It is starting to unravel. Got first entry on this on an H1M5 yesterday, or rather this morning. In somewhere up there. So that low, basically, which was the sell-off from last Friday. Look for a retest of that level. We got that propulsion gap as well to the upside. So that's obviously, again, nice extension below the 20 level. So big, strong move to get down there, looking for a pullback. Again, miles away from that 24. The market is attracted to the 24 like a magnet. So it either does that and waits for the 24 to catch up, or it just pulls straight back in to the 24.72 zone. If it's going to continue the trend, continue the direction that is. So one of those two. Pound New Zealand, not really very extended. It's come out of extension. Got a short on this one. Target down in that accumulation there, but it's not really going anywhere at the moment, as you can see. New Zealand CAD, we've already looked at. New Zealand Swiss, massively extended. We know about this one. So lots of positions on this. I've got another buy stop on this one. I'm just going to move that down. So this is, obviously you can see, yeah, totally extended and embedded. Exactly this opposite of kind of what we had there, although it wasn't so far above that 80 level as we are below the 20 now. So you can see it's scaled into that short and back out on that move. So we're looking for the opposite move to happen now. But big, strong Swiss franc move at the same time as the New Zealand dollar weakness. So this is kind of the perfect storm at the moment. So looking for a 50% retracement as they start to scale out of that Swiss move. But say we're waiting to see if they do. We're at a lovely level. This is the level I posted in the Telegram group this morning. We are finding buyers down here, as you can see. We've kind of stalled the move. Doesn't mean it's going to stop and just go straight back up again, though. So we'll wait and see what happens on this one. This is the one. So this is a 49 ADR. And as you can see here, that first to second entry was 74 pips, what we were talking about earlier. This came down so quick, from that initial entry all the way down to there, that literally there was no buyers in there. There was no reason to get in, no way to get in. So that is like 1.5 ADR between the initial positions, which immediately puts you on the back foot because your average is so much further away. But there's nothing you can do about it. You could say just scale in, but then all you're doing is you're just pressing the buy button because something's coming down, which doesn't really help. So just nothing you can do about these sorts of moves. Just unfortunate. But so that's come down very, very hard. Waiting for the pullback to continue on that, or start really. And US dollar Swiss, same sort of thing. So first buy entry taken on that one today. That's an H1 extension. So going to target that accumulation. So this low. So that's where we break down. This could go an awful lot further, obviously, if they start to undo the Swiss franc. But I think the problem we've got at the moment, I think, is this situation in the Middle East is going on too long. We need a decision. Are you going in or not, basically? Because they say, right, we're going in. We're going to obliterate them. Hang on, we'll just wait 3 days for Biden to turn up. Oh, hang on, no, we got Richie Sunak turning up tomorrow. It's like, what are you doing? You just waiting to have a chat with people? You heard about telephones? You can get this sorted now on the phone and then make your mind up. It all seems to be protracted and strung out for some reason. So all the time we are protracted and strung out, and there's no confirmation of whether or not Saudi, Iran, Iraq, all the other countries are going to get involved and start attacking Israel, which is going to draw the US and the UK into the conflict. All the time this is all up in the air. The market hasn't got any clue what to do, and it just doesn't want to put its money anywhere unrisky, which is why this Swiss franc move is continuing. As soon as it kicks off and we know what's going on, that's fine. We can then put our money in different places where we think we should have it. But at the minute, it's just sitting there waiting. So I get the feeling that's why we're seeing this continuation move in the Swissy and the holding of it, because we haven't got an answer. We have a conflict in Russia against Ukraine at the moment. We had the same thing with the Swiss franc being bought up and oil prices moving ridiculously quickly, didn't we? Exactly the same thing happened with the Ukraine conflict. As soon as we knew what was happening with it and who was involved, it all undid itself. Yeah. If you look at oil, when it all kicked off over there, because oil is one of those things that rallies when we have problems. So for the last 2 weeks, we've had a rally on oil. If you go back and look at when the Ukraine conflict kicked off, which I can't do on the 4-hour chart. Yeah. We were like, oh, okay. Yeah, and it's exactly the same. If you look at the Swiss franc, it was, oh, okay. That's what happens. We just haven't had the, okay, we know what's going on yet. And the longer it is drawn out, the more difficult it's going to be for the market to have any clear indication or direction on anything. NASDAQ has breached 2R now. Nice big drop on the NASDAQ and the S&P. S&P is coming down to that monthly level. Can't see it on this chart. So this is that old monthly low. Yeah. So it's kind of invalid now. We've basically chopped around through this thing for ages. So unlikely that is going to act as a support. It might do. It is the previous month's low. So this is September's low. So what you'll usually find is we test it and we either use it or we don't. If you don't use it, it's gone. Yeah. So that has kind of invalidated this level. So it's unlikely this level is going to hold, I wouldn't think. You never know, though. They might just use it as a, this is where we bought it from last month, remember, guys, type thing, but unlikely. So that is the only support we've got now until we get back down to ADR today and last week's low. So that's where I would hold to, or try and hold to. Doesn't look like there's any signs of it stopping at the minute. So the Dow is looking like it's finding some support. So we have got potentially some support starting to kick in there. NASDAQ's collapsing, all coming down. Long may it continue. Right, that's it. That's all the ADRs and RSIs covered. Where's my TP on the S&P? Yeah, so weekly low. So just above ADR, basically. So that's the weekly low. So ADR, we're going to start to get tired. Weekly low, we're going to find limit order triggers. So if we can get down to here, I'm going to get out before we get there, just in case they buy up before. You never know where exactly you're going to get some reaction. But if it does get through that TP, you're likely going to get some kind of pullback. The ideal for me would be for this thing just to sell off and have no buyers involved until we get there, because they will be so exhausted by the time they get there. They'll be so loaded with profit by the time they get there. As soon as they see some buyers coming, they'll all unload quickly and you can just get out fast. That would be ideal. What I don't want it to do is do this. And then like hit TP and then hover around like that. You want it to just go boom. But then when do we ever get what we want? That would be nice, wouldn't it? AZ, I've lost all my gains this month to drawdown control. Yeah. This is the problem with drawdown. It's a double-edged sword, drawdown control. So drawdown control I've always done manually. I started using the EA to do it automatically for me when it got to an ADR. That was too aggressive. So I moved it out to 1.5 ADR, which seemed fine. But what it does is it often gets you out with losses after 3 positions. So, and your rate of drawdown. But it also, if you get a position which lasts 3 or 4, it gets you out of that position quicker, but it forces you out of that position quicker with less profit. And obviously you take loss along the way. So it reduces the amount of money that you make. The old way of doing it manually, you would hold on to positions for longer and use the profits to get out of them when you think they're in trouble. So when something's coming down 2 or 3 ADR against me, that's normal. I'm waiting for them to do that so that they can take profit on the move. So if you take automated DD control, it reduces the amount of pain that you have, but it also continuously gives you a red P&L if you've got multiple things doing it at the same time. So it's a double-edged sword. But you get a massive, it all undoes very, very, very quickly. This is what I mean. You go in waves with position trading, where you go into drawdown and everybody says in the Telegram group, why does it feel like I'm sitting in drawdown forever and then I suddenly only get 1 day where I make money? Because that's the way it works. You climb up the stairs and you fall down the elevator shaft. That's just what it does. It's just the market movement. So you just sit in pain for ages waiting for the pleasure. You've got to make sure you take the pleasure though and don't get out at break even and then lose all the pleasure, which is the difficult part. Again, nothing's easy in this game, is it? But it just really depends on how you want to do it. But there's no right or wrong in anything. It's just personal preference. When things are starting to get ick, then you get out. But if you do it automated, you don't have a choice. And it's really nice having it done that way. But it's also a bit demoralizing seeing negative P&Ls, isn't it? I think somebody posted in the Telegram group yesterday a P&L. Yeah, so they're up. They're down 2.24% this month. Drawdown for the last 4 days, 1 day of profit. But that's what happens if you use automated drawdown control. But then again, they'll be in less drawdown. So where I'm in sort of 16 to 18% of drawdown, they'll be sitting in sort of 10 to 12% of drawdown. it's just having that that gap basically of more drawdown or less drawdown. Really, that's all the difference it makes. I won't be surprised to get some type of massive move on the yen pair, similar to the Swiss debacle years back. Yeah, intervention move. That's what we're waiting for. The US keep cocking it, well, not cocking it up, but that's the last intervention that wasn't an intervention. We were expecting either that or that. And what we got was this, which is not what we've had previously. So the last 3 interventions we've had, which started in October last year, same time, same price, they were very quick. This is very protracted. But again, if you look at last October, yeah, that's the first, that's the second, that's the third, that's the first. So, but the first this time happened at the second price point, 150. So, and the move was obviously half the size. So it's difficult to tell, but this is the level we don't go above. Because it's not cost effective for Japan to let it happen, basically. Oops. Best to look on the daily chart. You got to go back an awful long way to find us back at that level, 150, yeah. Which is going back to 1998. And look what happened. Yeah, it just doesn't happen. We just don't go above 150. It's just not economical for the Japanese economy to perform above that point. So they make sure. Don't forget, remember what I said earlier about how the Japanese is the reason they have this negative interest rate, yeah, because they don't hold any of their own currency. Yeah, they're a tiny little place compared to everywhere else, but they're a big powerhouse for exporting electronics and all sorts of other things. Yeah, so they don't hold money of their own currency, which is why they have a negative interest rate. They are actively encouraging business owners not to hold the yen. Yeah, if you want to make money, yeah, and earn money in savings, you don't put it here. Yeah, it's like if you imagine in your country, if your government turned around and said, right, we're going to give you, if you put 100 grand in the bank with us now, in 6 months' time, we're going to give you back 99. You'd be like, well, I'm not going to do that, am I? US are going to give me like 5.5%. Well, go and stick it in the US then. You bloody will. Right. Okay. I'm off to go to the US. That's exactly what they do in Japan. So Japan, as I said earlier, has a large holding in all other currencies and commodities. So when it needs to, if it wants to make its currency strong, it sells everything. It's like a fire sale. Sell it all. Buy it all with the yen. And the yen just goes, whoom. Yeah, so they've got that power. They've got that control. And that is what they do. So we're just waiting, really, aren't we? So either one of two things happens. The world goes, yeah, all right, we know it's coming, and they just do it anyway, which is what we got here when we got warned. They warn us as well. They're going to do it. They're not stupid. They tell us they're going to do it, and then we don't listen and they do it. Or we do it. So that's what's going to happen. We're either waiting for the market to do it or we're waiting for them to do it. It's coming. But you never know when it's coming, and it usually comes during London. So it's not today. But it could be any time. But yeah, it's coming at some point. NAS has support the 5R area, yeah. Can't see it on this chart because it doesn't go back far enough. So it's basically here, which is it's kind of on that monthly line where we got that propulsion buy at ADR. It's all this confluence. It's all of that lot down there, basically, is where we bounced from last time. And then we've got this backup support. So this is last month's low. This is the previous month's low. This is the high from 2 weeks ago. Sorry, the low from 2 weeks ago, which was a bounce off of the previous month's low before we started that rally. Yeah, and then we pulled back into this area here, which we bought. So it's either that or this area here. So one of those two. If we get there, we got to get there yet. Can't bounce if it doesn't get to the location. So just hopefully they'll just continue to sell it off. So they're certainly selling it off at the moment. Look. So we're just waiting for that sort of dead cat bounce. It's much better if it comes down. The faster it comes down, boing, the bigger it bounces, yeah? If it grinds down to a level, it's harder to get the bounce. If it slams into the level, it ricochets. Yeah, like bang, bang. You grind up into a level or grind down into a level, it just takes ages to bounce. So yeah, lovely. If we get 2 hours worth of pure solid selling, 2 hours, it'll just flip like a dime later, which is exactly what we want. So as soon as we hit that target, what we want is as soon as we get down to that target level, we want pending order on and a bounce back, trigger out, done, quick as we can. But we don't always get what we want, do we? Very rare the market gives you what it wants. What we want, whenever we enter any position, what we want is to go, right, I'm going long here. I'm going to put my target there. What you want is it to go, okay. Never does that, does it? How many times do you get into a trade, put a target, and it just goes, yeah, no problem. I've had 1 or 2 in the last month, haven't I? Where I got in on a Thursday and I got out on a Friday on a 125 ADR push. It was like, thank you. Probably 2. Just doesn't happen, does it? Wouldn't that be nice? So how big did your DD get this month considering the New Zealand dollar squeezes? So 16% so far. I say so far. Could get bigger than that. Depends if these carry on. Which at the moment it's rejecting the support rectangle. Look. Yeah. So that was the last time we tried to buy. We sold. We've just come back in, tried to buy that level again. Sold it again. But it is Friday. However, it is Friday going into the weekend. What happened last Friday? We sold the crap out of it, didn't we? That's not last Friday. That's yesterday. Sorry. There we go. Last Friday, we sold the crap out of it because it's the war kicking off and we're going into the weekend. Deer cat bounce. No, dead cat bounce, not deer cat bounce. I know what you mean, though. Libby, so with such big drawdown, you need to have your own capital. No prop firm will play along with that. Yeah, no, you can't. You can't position trade prop. I've said this many times. Scalp. So since manual DD is off, what goes into your decision to close out some drawdown? If when I get uncomfortable with it, basically, go watch the YouTube. Go and watch the Bootcamp. Day 3. No. Day 4. Managing drawdown and risk. That day is all about managing drawdown and your comfort levels. So when you're uncomfortable in a position, close it out. My comfort, I've done so many videos on this. I'm not going to go through it again in detail. There's so many videos on drawdown control in here. Aggressive drawdown control, turning any losing trade into probable, how to survive a squeeze. It's the number one question because it is. This is the thing that people have questions about with position trading. What happens if it goes against you? It does. That's what it is. You have an account. That account is your risk. You use that account. It's not like normal stop loss trading. On a normal trade, you go, I want to go long. And if it doesn't go there, I'm going to get out with a large proportion of my account. This isn't the same thing. You're using your entire account as risk. Yeah. You're trading a position. You're trading a swing. You don't know how long the swing is going to take. When the drawdown gets to a point where you're uncomfortable in it, you take some of it off. When you're uncomfortable isn't something I can tell you, because I've been through these hundreds of times. I know what's coming. If you're sitting in this as your first ever one, you're panicking, you're not going to sleep. I don't know what drawdown you'd be in, but I was like that. I had sleepless nights when I started trading this way, because it was like, holy crap, this thing's never off. Weights come off your shoulders. After the weights come off your shoulders for years, you just wait. Yeah, my comfort level is so much more relaxed than most people's will be, because I've just been through it so many times. So, but I will get to a point where something's sitting in 5% of drawdown in a single position, and I'll be like, this is, if I can't see, and this is the thing, if I can't see a reason for this to bounce, let's say, for example, this has happened, right? If that is 5% drawdown on my account here, yeah, I would be looking at this going, oh, I can't see anywhere this is going to turn. I will just go, I'll take 3% off, 2% off, 2.5% off. I'll take whatever I need to take off to really reduce that. If we're at a point which is a double bottom bounce, which has been retested, and it's the first time we're testing it after a parabolic drop, which has gone below the 20 level, the lowest we've been for years. If we're at a support area which is likely to bounce, I'm not taking any off, because there's a high probability this will bounce. If on Monday we're down here, yeah, I'll be going, screw you. I'll get out some. But all the time you've got a support area coming up. We know the market spends its entire life bouncing at support and resistance. That's what it does. So as long as there's a support or resistance within reach, the market hasn't bounced yet, it's likely to do it. Remember the elastic band theory from the Bootcamp. The further that is stretched, the faster that ping back is going to happen. Yeah. Everybody on the CAD Swiss last month was going, this is never going to end. And I said, yes, it is. It's going to end there. Why did I say it's going to end there? Because that's where it ended last time. Why? Because that's where they bought it from. And when they broke through that level, that's where they sold it from. And every time we've got to that level, they've sold it. So I said, just hang on until we get there, and then it will bounce. Look at where we are, right? Look at what happened in that trade. We got in, we got in, we got in, we got in. Everybody panics and we got out. We're just the inverse of that at the minute. That's what happened last time. Why is it going to bounce here? Because that's just what it did last time. And it hasn't had a profit take move. The banks and institutions are so rich at the moment, shorting the CAD Swiss. They're sitting there going, I've got $1.5 million on my P&L. Oh, I've got 900. I've got 850. I've got 800. Need to get out of this. And as soon as they say I need to get out of this, they turn those sell orders into buy orders. And what does that mean? The buy propulsion move starts. The profit take. Yeah, the climbing up the stairs, falling down the elevator shaft move. In this case, we're falling down the elevator shaft and bouncing out of a trampoline because it's the opposite direction. But that's what it does. Yeah. Why did this bounce here? Because that's what it did last time. It's what the market does over and over and over again. It moves from support to resistance because this is where the banks and institutions do not want this to trade above. The Central Bank of Canada will be saying, push it up to this level, but don't push it much further than that because it's not going to be cost effective for us to deal with the Swiss. And the Swiss will be saying, don't let it go above there because if we're going to buy the oil from Canada and the US, we don't really want to pay more than that. This is why you have levels of price and then the fundamentals will shift, the economy will shift, and all of a sudden it's more economical for you to transact at a different range, which is why you have areas of balance, price discovery, back to balance, price discovery. Maybe we might try that area again, reject it, and then go lower. That's how market structure works, how price moves. It's just levels that the banks and institutions are willing to conduct business at. And if there's nobody willing to conduct business down there, you ain't conducting business down there. So you have to go back the other way. Support resistance. When you come to it at such a speed, you will bounce a lot faster. Think of it like dropping a bowling ball from the top of a car park, a 10-story car park, and dropping it from head height. It's going to bounce a hell of a lot bigger from that car park, isn't it? Dead cat bounce. Yeah. I've never seen a dead cat bounce. In fact, I've never seen a dead cat dropped. I don't know why they call it a dead cat bounce. I suppose a dead cat bounce really should be a... Because if it was a live cat, it would have gone meow. I don't know. I don't know why they call it dead cat bounce. Never really looked into the terminology. But I don't know. That's what I would suggest a dead cat bounce is like. A thud. And anyway. But again, you know, it's entirely down to you. If you have to have faith in what you think is going to happen. So if you don't have faith in a bounce from a specific level, or you don't think it's going to do what you want it to do, you can do something about it. And the worst case scenario is you're going to knock 3% or 4% off your account if you have to close the entire thing down. And if you have to do that, what's that equivalent to? Having 3 or 4 losing trades in a row with a stop loss. Nothing's changed. It's just we've been sitting there for 2 or 3 weeks waiting to take the loss instead of taking it today and then taking it tomorrow and then being 10% down on the account going, this strategy doesn't work, I'm going to hop onto the next one. That's the difference. It's just different. It's all just different, isn't it? Takes a lot of time to get used to it. Also, the Swiss just sucks. Isn't it fair to say that Swiss trends a lot more than other currencies? Yeah, it does. Well, it does and it doesn't. If you look at the Swiss, it depends when you look at the Swiss franc movements, you say that now, right? Look at this Swissy on a daily chart. It spends a lot of time doing the same thing as everything else, but it has these big, strong things that happen. Yeah, that's COVID, obviously, but it's not much difference to anything else. Yeah, but when things are going wrong, yeah, the stock market is crashing. As I said, what happens when we aren't? When we're in a bear market where we're unhappy with risk, what we do is we put it into places that are safe. What's the stock market been doing all year? What's the CAD Swiss been doing all year? Because the CAD's been strong. But then again, what's oil been doing all year? Yeah, there's always two things at play. So if you've got oil dropping and everybody pulling money out of the stock market to put it somewhere safe, yes, this is going to trend like a nutter. But what happens when we go back into a bull market and oil stabilizes? This thing is going to stabilize in exactly the same way as it used to. So and again, this is why I always say to people who say, oh, I'm never trading the Swissy again, or I'm never trading the yen again, because it's burnt you once. It's burnt you once, but those conditions aren't going to happen again. So you can't write something off because it's done something. Like the euro. The euro's been absolutely caned for ages. Wasn't in the past, has been now, but why is it going to continue to do that? It could easily shift and just come back up, or it could stay in a range from now. What's happened in the past, and this is why trend trading is so difficult, is not necessarily what's going to happen in the future. Look at where we're coming to on the Euro Swiss right now. What do you think is going to happen at this bottom from June last year? We're going to get a bounce. Why? Because that's where we bounced from last time. But that will only happen if the conditions are right now. So if we've been pulling down really, really hard into this level, and all of a sudden this war kicks off, we know who's involved, and everybody starts to sell the Swissy, that could be the catalyst that we need. And for Lagarde to say, we're going to put interest rates up, that thing's flying. But the fundamentals have got to be on side as well. You just don't ever know if something is going to continue a trend or it's going to reverse a trend. You just don't know. Look at this. This hasn't trended all year. We're going back to December 2022. Hasn't trended at all year. If you want any more confirmation of how crap August and September have been compared to every other year I've ever traded in my entire life. There it is on the chart. Normal movement. August, September. October. This market is just nuts. This entire quarter has been just bonkers. Everybody is in the same boat. Everybody I've spoken to is in the same boat. It's like, what's going on? No one knows what's going on because it's just bonkers. It's just not normal. The whole market is just not its normal self. We're going back into a bull rally. No, we're not. We're in a bull market again. No, we're not. You said we were in a bull market. We're not. Yeah, this is not a bull market. If we break this low, we are in stage 2 bear market. Yeah, we've never had a stage 2 bear market. This thing has never done that. Pulled back, made a lower high, and done that. Never. The S&P has never done this. Yeah, it's never done that. We've never had a pandemic that's caused that. We've never had a bear market last for an entire year and then try to recover for a year and start to fail. There's so much going on at the moment, which is just not normal. You just got to basically cross your fingers and hope. It's just one of those situations at the minute. We're just in a totally balmy. You can see it on the charts. Go and look at any chart. Go out onto the daily time frame and zoom out. There's so much price action and patterns you just look at and you go, I can't see that ever happening again. But then, you know, the 2008 crash, we didn't see that coming. There's all sorts of crashes we've had that we've not seen before. There's all sorts of things happened, like pandemics we've never seen before. Just different. You've got to adapt to basically market conditions. This NASDAQ's coming down beautifully, by the way. So we're approaching, we're 4R now on the NASDAQ. I'm almost tempted to move that down. What worries me is I'm basing my TP on a, well, not basing on a line, but on such a wide area here. If you take this low here, which is the highest low there, and the lowest low there, and draw a box. Price could literally pick any of those lows in there to bounce out of. So if we're looking for an area where we're going to find limit orders triggering for institutions, it could literally be absolutely anywhere in here. So whenever you get your TP hit after a move like that, you know, we could be looking at a 125 ADR push, which is that previous monthly low, all the way down to there for that bounce. So difficult to pick a low on it. You know, there's also the consideration that we may be proper entering into a bear run. Look, high, low, lower high, lower low, lower high. What comes next? All these people on Bloomberg saying, yay, it's all going fine. We're entering back into bull market. This is just a pullback. Don't worry. Don't get it. This is not a pullback. This is a bearish market structure. Might be wrong. It might be a pullback. Bit of a funny pullback though, isn't it? It's more like a flag if it is going to be that sort of move. But don't know. We'll see. We'll probably find out next week. And that dead cat bounce, which relieves some of the drawdown, usually tends to happen soon after we do some drawdown control. Exactly as Evil's just said. There's many instances in the past where I have gone, I can't take it anymore, and I'll close half the position. Literally, I do that in the morning in Frankfurt. Then I come on for the London session and the thing's gone up 125 ADR, and I'm just like, couldn't make it up. But this is what a squeeze is. That's the definition of a squeeze, why they call it a squeeze. You are squeezing the traders who are the opposite direction until they pop. And by popping, they mean take loss. When there's nobody left to squeeze because you're just going to get out, and the volume disappears that you can sell to, that's why that happens, because there's just no one left. Yeah. So when you get out and you've squeezed that's the point where it typically will go back, which is why I like to hold on a little bit longer if I can, because it always does that. Oil did it to me last year or earlier this year, wasn't it? We got the oil drop. This one. I can't remember where it was. Can't remember which point it was. It's there. It's there. Yeah. So I was long from somewhere around, well, 4 hour. It was long from here, I think it was. Didn't get out. Can't quite remember what the trade was, but I basically said, if this thing drops any further, I'm out. I'm closing the whole thing. And I took something like a 9% loss. Can't remember what it was. And I went, can't do it. I'd made a lot of money on this. This is why I was like, I don't care. I'm going to hold it. Made a 9% loss, whatever it was there. I took it off down here and I was like, you watch. Didn't just rally, it popped. I think it was there. I can't quite remember exactly where it was, but you can go back and find it. But it's always when you're going, I just have no faith anymore. You just go, screw it. And you go, brilliant. And then the day after is when it goes and you're thinking, oh my God, what I should have actually done is not take it off. I should have put an aggressive drawdown control position on. Because when you get to the point where you want to take it off, it's gone so far, you think, now's the time you want to hit that button. But it doesn't always work that way. Speaking of aggressive drawdown control, I took an aggressive drawdown control position on the pound US dollar today, earlier on, here. Basically, you can see the entry there. So what happened was we came down, we double bottomed off of that 3-bar reversal. So that's the retest of what I'm anticipating being a W bottom. Yeah, so I took an aggressive drawdown control position there as we pushed in and rejected. So on the lower time frame today, what was that noise? That just sounded like it thought I'd moved something. What that was. So there you go. There's the reversal alert. Look. So we got that reversal alert there. That's where I took the entry, which was double bottom on the hourly time frame. So again, it's an aggressive drawdown control position and it's got a stop loss on it. What? Down there. So there's the stop. So either it's going to take me out, that's fine, I'll take a loss on it, or it's going to work. My average is now within ADR. This pushes up and gives me an ADR hit today. I'm out of the pound US dollar for good. Done. But it's because I'm at the point where I'm thinking, this pound US dollar, it ain't working. Yeah, I can't get out of it. So I'm either going to take a loss or I'm going to get an aggressive move that just gets me out. And I go, that was wrong, wasn't it? But I'm out. That's it. So what I'm looking at here is low, high, higher, low. Yeah. If we invalidate that, market structure's broken short again. We're carrying on this trend, aren't we? So this is either double bottom, last chance saloon to get this new higher high in, or it's not going to work. And if it's not going to work, I'm going to take an aggressive drawdown control and I'm going to shut some out. Take more loss because I haven't got a choice. It's just not going anywhere. Yeah, I've been in it for 3 months now in some shape or form. 19th of July, August, September, October, 3 months. But all I need, literally, and this is what I keep saying, this is the whole point of keeping your average within ADR. All you need is a good ADR push in your direction and you can exit your position. Yeah, I just need, just give us an update. For God's sake, give us an update. It's not happening, is it? But look at the structure now. So this is either a continuation short or it's a W pattern reversal. And we're going to pull up back into where I expect it to go, which is coming back up into test that area. One or the other. Who knows? Are you aware of an add-on that prevents a trade to be held less than 1 minute? I'm on a prop account, Trading Pit, and they do not allow trades shorter than 1 minute. The reason they've put that in place is because they don't want HTF, not HTF. What am I thinking of? Got HTF in my head for some reason. HFT. Sorry. HTF doesn't make sense. High frequency trading. They don't want high frequency trading algos running, basically. Because it's a demo account and they can't replicate the trades. So, yeah, it's basically just... the Trading Pit is a massive scam anyway, so just get out. Don't use them. They're one of the companies... I think the Trading Pit is one of the companies that's run by that group, husband and wife, that are all related to 8cap. They're all going to get done soon. But is 8cap the broker? But if it is them, I can't remember. They've changed their website. Tradingpit.com. $1,000 for a 100k account? You're having a laugh? Oh, 1,000 euros. Okay, fine. That's still bloody expensive. I don't allow you to trade news either. Yeah, but it's... Ask any trader out there, right? What are the biggest trades you've ever had that have made you money? Everyone will turn around and go, remember that massive spike when Powell said they were going to increase interest rates? Yeah, and it moved up 300 ADR. Do you remember that? When we made 16 grand? Yeah. No, not allowed to do that because they can't replicate that on their fake accounts. Oh, too many rules. Too many rules. They've all got too many rules. Somebody contacted me about the Trading Pit. There's a husband and wife team that run a load of prop firms. They've got about 7 or 8 of them. I think that's one of them. They're outside of the US, so the CFTC can't touch them, but their regulators will. At some point, they're making a lot of money. Great cat impression. Meow. There you go. Living cats land on their feet, i.e. stick the landing. Dead cats would just bounce off the ground. That does make sense. That's what the dead cat bounce is for. So, for dead cats. Why do we call it dead? Why do we... Human race insists on calling things hideous things, don't they? It's just like... You can tell it's come from a load of booze-soaked, cigar-smoking pit traders at some point in the 70s. They've come up with a nickname for something. Do you see that bounce? Yeah, bounce like a dead cat. Just they're hideous people that just came up with something really nasty for a support resistance bounce. Anyway. So now you're just doing manual DD control. You just look for the aggressive DD levels, or would you potentially look to close out? I think we probably covered that. Yeah, so you close out more. If you do aggressive drawdown control, all in the bootcamp. Bootcamp is how I have always traded. I started doing automated drawdown control using the EA. I found it too aggressive. And I found myself going For God's sake, if I hadn't have done drawdown control, I would have made X. However, I've had points where I've gone, phew, I'm glad I did drawdown control because otherwise I wouldn't have been able to get out. But the thing with the drawdown control, the automated drawdown control, is if you've got, as I said, a 3 or 4 position trade, you're going to take a little bit of a loss, you're going to take a little bit of a loss, and then it's going to come up. And the difference between your average would have been there, but it's now there. That difference is not worth taking all that loss because it's going to do that anyway. That's what I found, which is why I decided to go back to the way I used to do it. But there's no right or wrong way of doing it. I'm just more comfortable doing it. Sounds like he closes out the drawdown as he closes loss. HFT, the trading pit, the brokers are either GBE broker or FX flat. Oh, well, they might not. That trading pit might not be then. Look at who owns the trading pit on wherever you will find the information for wherever they're based, and then look up who owns GBE brokers or FX flat brokers. Yeah, and see if there's any relation. If there is, you're in trouble because that's what's happened with my Forex funds. The bloke that owned the prop firm owned the brokerage. Therefore, you paid him money for a demo account, and basically, if you got anywhere near passing, he would just widen the spread to take out your positions because he had control over price. Brilliant scam. So just be careful and try and look into due diligence. Until there's any sort of regulation and stuff put in place, I'm just not really interested in prop anymore. Had my fingers burnt. Loved it. It was great. Made money. Haven't got faith in any prop firm at the moment. No one can turn around to me and show me segregated accounts that they're trading on behalf of traders. Until one of them can turn around and prove they are doing what they say they're doing, they're all lying, as far as I'm concerned. If you weren't lying, why won't you prove it to us? Yeah, contact FTMO and say, could you just show us your segregated accounts, please? Because they will have segregated accounts if they are trading on your behalf. They have to. Their brokerage has to. The other thing you want to check with the trading pit, GBE brokers and FX flat, it costs around about $250,000 to set up a brokerage. So just make sure that GBE brokers and FX flat are regulated, because you can have a broker that's not regulated, doesn't cost any money not to be regulated, therefore there's no protection either. So just check. Yeah, it's just people will disappear. Brokers vanish. Brokers, there was a stage back in mid 2000s, I would say, to late 2000s, where brokerages would pop up and they would disappear in 6 to 12 months. And the reason they would disappear is because the reviews on places like Forex, Peace Army and that would get so bad that they couldn't trade anymore. And then they'd just go pop, make another one. Yeah, they weren't regulated. They may say they're regulated on the bottom, but go and check the regulation. They weren't regulated. I could set up a website tomorrow called Lee's Brokerage. Yeah, and I can put I'm FCA regulated on the bottom until the FCA realise and go, hang on a minute, he's not on our list, and say, excuse me, you say you're regulated by us? Pff, vanished. There's a lot of that going on. With prop, I think you might find behind the scenes there's quite possibly a lot of brokers that are similar to that coming back out of the woodwork. So I don't know. I'm just being skeptical because I've seen it. So I've been in Dow position since the 16th of August. You've been in a Dow position. You're brave. I don't position trade stock indices. August. Yeah. I have never position traded indices because indices, I mean, but this is going back. Yeah, I don't position trade indices because indices normally do that. Whoops, after COVID. Normally do that. That's what indices typically tend to do. Since COVID, indices have done whatever the hell they like. As you can see, that's a really clear indication of how screwed everything is at the minute. Normal. It's all since COVID, yeah. Everything became abnormal. Volatility picked up to twice its normal size and everything became crap. Everything hit the fan when that happened. We're still paying for it. When are we going to get out of it? That's the question. Back to normality. That's what we want. Does anybody know if there's a way to analyze how many times the DAX has hit 3R within 1 hour of the open over the last 5 years? Backtest it. Take screenshots. Backtest it. So if you've got the stock index hedge EA, you can have it take screenshots in the strategy tester, and it will store it. So do a 5-year back test. Probably take 3 or 4 hours, 5 hours or something to run. Maybe not even that. You'll have a folder with a screenshot of every single day. So basically open number 1, flick through them, yeah, and have a little counter going 1, 2, 3. You can answer that question. It's going to take you a bit of research, but if you want to know the answer, you're going to have to put the time in. My favorite one of them phrases is shitting like an elephant and eating like a bird. So describe those who close out too quickly when they're running in profit. I've not heard that one before, but that is a good one. This is testing. This is testing me today, look. The main terminology that they use in the pits, and always used to use in the pits, was puking. And it's come through into, there's quite a lot of education in the futures market. If you do any futures trading and any futures courses, they still use that terminology today of somebody puking. And it's basically stop and reverse. Yeah. So this is a perfect example. Yeah. So the market opens short, everybody goes long. They buy it, yeah, and they buy it, and they keep buying it, and then they can't get through that level. So what they do is they take a loss and they puke. They puke. And it's just basically a terminology for you can't get through here. So what's going to happen is you're going to throw your guts up and we're going to collapse. So it's like a brrr. And that is a perfect example of a puke in the stock market. Market's puked. It's horrible, isn't it? That's what I mean. These blokes that worked in the pits back in the 70s and 80s were literally drunk on coke, smoking cigars in the pit. Yeah. And some of they were rough guys. There's a really good documentary on it on YouTube, actually. But yeah, it's one of those terminologies that I've always heard. And I use it as well. I can see when the market's going to puke because there's an iceberg order sitting there. You ain't getting through. You're going to puke. It's great. I love it. Not very nice terminology, but it's very, very true. Your opinion on purely futures prop like Top Step or Take Profit Trader? Still the same scam risks? Yeah. They're not any more regulated than anybody else. Yeah. So when you sign up with Top Step, you have to register yourself with the CME, but you have to register yourself with the CME if you get a demo account with NinjaTrader. You don't have to place any money anywhere. If you want a data feed, your name goes down on the CME register as being a trader. People think, well, I'm trading futures. I've had to register with the CME. No, you've just registered with the CME so that you can get data. You're not trading anything. You are looking at data on a screen. You're pressing a button, and Rhythmic, the platform that sits behind most of the futures platforms, is basically demo trading in exactly the same way. Have they got any segregated accounts? I don't know. If they haven't, they're not trading on your behalf. This is the thing. When you look at the accounts for these firms, about to hit TP on the NASDAQ. When you look at the accounts for these firms, they only have one set of accounts. You look at any brokerage, there are always two sets of accounts. Yeah. One is the brokerage accounts. One is the segregated funds. Every penny that is traded has to be in a segregated account, protected under regulation. If it's not a regulated broker. If they can't turn around and say, this is our P&L from prop evaluations that we charge, this is our segregated P&L from trading funds, they haven't got that, have they? Why has no prop firm, when they've been asked, come out and given that information? Either they haven't got it, or they have got it, and for some reason they want to keep smoke and mirrors. No one else is. If I was a prop firm and I had segregated accounts and I could prove that I was copy trading my customers' accounts, I'd be screaming and shouting from the hills because every trader in the world would be using me right now. None of them are doing it. Why? Got to ask the question. No one's asking it. No one's answering it, more importantly. It's the way I see it at the moment. I'm owed money by my Forex funds. If I put money into another one, who's to say I'm just throwing my money? I'd rather trade my own funds. Really thinking about TPing. Oh, this is dicey down here. This is the first bull action we've had. Look, sustained, but they ran straight into sellers who are making new lows. So what I don't want to do is let this run away without me, because we're going to get a pullback on this at some point. We're not far from ADR either. Dow is rallying back down further as well. S&P is making new lows. It's just the NASDAQ which is struggling a little bit more. 430, blimey. Serge, what is your WLB propulsion gap settings? Just default. Yeah, just default. Don't change any of that. Top Step has been confirmed to be the owners and investor capital that you trade with, hence the somewhat more realistic industry rules. Where's that been confirmed? They've said that, but they've never proved it. Go and look Top Step's accounts up on Companies House. There isn't any segregated funds accounts. But I don't know. I mean, I just need a little bit more proof at the moment. Torpedo, oddball question, but can you give a basic explanation of what options are? No. I don't trade options. The reason being, I don't understand them. So no, I don't do anything to do with options. Never looked into it, never done a course on it, never touched it, never been interested in it. So I don't do it. So I can't give you any information about it. I don't know how they work. I don't know how you risk. I just don't know. That's one for somebody that trades options. I'm getting very close to TP on the NAS. This is what concerns me. The next support isn't until down there on the S&P, and these two guys move together. So if this is going to hit target, this has got to go further. If I get out here on this, which is support, one of these supports going to hold. Either that support's going to hold, or we're going to go down to that support. Don't know which one it is. So it's quite a risky exit here. Not actually letting me out anyway, but market is certainly slowing. Okay. Out on the NASDAQ? Come on. It will get me out. There we go. Out of the NASDAQ. Why have you closed my shorts? Why have you closed my longs? What? Why has it closed my long positions? Weird. I don't know why that's closed. Ah. Yes, I do. I held a position on the NASDAQ overnight. This is an important thing about the stock index hedge EA, yeah? And this is why we have this close at end of session. I turned the EA off last night because I wanted to hold a position long overnight on the NAS. Obviously, it's taken that into account, which is why it's showing that profit. So I'm going to need to manually long this now to get myself out of that position. So it's going to be above that high. So yeah, that I did last night because I held a position overnight. I don't hold overnight normally, but last night I did because I took a loss yesterday on this. So I got out the shorts down here, and I got out of initial longs there, but I had additional longs on, which I held overnight. So I'd scaled into longs right at the close and here last night, which I got out of with a profit here. So it's taken into account the profit that I made overnight and added the two together because it was taken with the EA. Stupid. Didn't think about that. That was me trying to be clever and actually ending up being stupid. But anyway, doesn't matter. I can get out of this manually anyway, because what I'll do now, I'm just going to replicate the orders basically. So pending orders trailing above the highs, and then I will get out when we get at least 36 points in profit. So back up into that propulsion area there roughly. With those two positions, that will generate an overall profit on that whole thing. S&P, obviously, I'm still in. Didn't take that into account. No reason why you should actually take that into account, because that isn't what you would normally do. That's not the point of the EA, is it? So anyway. For a loophole, for legal reasons, M321, what was that to do with? FTMO or prop firms? There's no reason to have a loophole anywhere, is there? If you want to be an above board legitimate company, why would you need a loophole? I don't know. I'm just a little bit cautious of at the moment, let's say, after what happened with my Forex funds. It's just a pure claims on Top Step's behalf. Yeah. Okay. Can't find anything in company filings showing segregate separate accounts. This is the thing. There's somebody did a video on it. So when this whole My Forex Funds thing blew up, somebody did a video about it, and they did a, I can't remember who it was. I watched it. I really can't remember who it was. But I watched it basically, and they did quite an in-depth look into the people that run the prop firms, the reasonings behind the CFTC investigation, and exactly what rules had been broken in as far as CFTC were concerned, why the Fed were getting involved from a fraud perspective. And they looked into all the reasons that had been listed on the CFTC website. And then they applied that to all the other prop firms, big, small, and they picked multiple ones. And FTMO was one of them because they're one of the bigger ones. They also looked into E8, and they looked into Apex, because Apex were futures, and Apex have been around for a long time. They couldn't find any information on any company's listing or filed accounts in any country for any of these businesses that you would find if they were a regulated broker. So the question is, to run a prop firm, do you have to have or be using a regulated broker? Right? So the CFTC have shut my Forex funds down because they were running a brokerage, yeah, and the same person that owned the brokerage owned the prop firm, and that brokerage wasn't regulated with the CFTC. Yeah. So the question is, are the CFTC going to go, you've been naughty, but you don't have to be regulated? Or if you have to be regulated, every single prop firm out there at the moment is running the same business model as my Forex funds as far as everybody's concerned, because they won't say anything else. So therefore, if that CFTC filing comes through as you are not doing this again, they will all have to shut. So you will find there will be a rush suddenly from all the regulators around the world to shut all of their countries' versions of these people down. And every large solicitors firm in the world will launch a class action lawsuit against the prop firms to get every penny they've defrauded out of people back. So everything you've ever paid to a prop firm in an evaluation fee, you will get all of that back, or as much as you can, but they will have gone bust. They will disappear. So you'll get a certain amount or percentage of it back, maybe if they win the suits. This is why I'm skeptical of it, because there's no company that can turn around and go, don't worry, guys, we're all above board. No one said that. Why? If it was legitimate, why wouldn't you say it? Yeah. If it happened to a regulated broker and they broke a rule, all the regulated brokers would turn around and go, we don't do that. And you'd flood to them. But they're paying £250,000 to set themselves up in business. I can set myself up with 8cap tomorrow as a prop firm. No problem. They'll give me a website. They'll give me a subscription system. And all I've got to do is set up the rules, press a button, website's launched, and now all of a sudden I'm a prop firm. 24 hours. No regulation. I don't know anything about anything. But I can do it. That's the problem, isn't it? So if I can do it, I'm not a criminal, but there's a lot of criminal entities out there that probably will be doing this and manipulating in the background to make sure that it's not in your favor. Who's regulating that? No one at the moment. So that's just my thoughts on it. You know, I might be totally wrong. I've no idea. I'm not even bothering to look into it because other people have, and I'm quite happy with what they've found. But they might be wrong, you know, so make your own mind up. But at the minute, you're better off using your own funds. Even if, you know, over leverage on your own funds to replicate the prop, you know, sort of environment. You're better off, I think, doing that than you are giving your money to prop. Because I don't know if they're going to manipulate it. There's so many rules that you break. So we have people in here that have broken rules they didn't even know existed because it didn't appear on their website. Yeah? You're not allowed to trade through this news that doesn't exist on Forex Factory. It's like, well, why can't I trade through that news? It doesn't exist on Forex Factory. No one's ever paid any attention to it. Yeah, but we don't want you to. You won't find out they don't want you to until you've broken that rule and they've taken your money away from you. Your funded account's gone. Yeah, so many things in their favor, isn't there? Any updates on the new strategy I was looking at? No, not yet. I did some more testing this morning. It's all looking good. But I have a problem with there's a lot of different ways you could execute entries, and I'm just looking at different ways of executing entries. But the methodology seems sound, but I don't know. Like trading aircraft. Brian, there you go. So it was Brian, basically, who, you know, that was with Fidelcrest, wasn't it? You weren't allowed to trade through the aircraft inventories that were non-military or something. It's like, what do you mean non-military aircraft inventories? You know, you go and look into yellow news and you find it's some weird and wonderful thing in yellow news that you never even knew existed because no one's ever paid the blindest bit of attention to it. However, they've put it down as a non-tradable event. You're never going to know it. Like the federal budget balance. Yeah, no one pays any attention to that. But in your contract, it could be that you're not allowed to trade through that. You're not allowed to hold 2 hours before or after it. You're not going to find out until that's happened. you know, there's just so many rules and regulations they've set up for themselves to make sure that it's as hard as possible to pass. Should be triggered long now on the re-entries. So just looking to get a little bit of profit to the upside. This could go all the way to the pre-market low. So I'm going to go with the benefit of the doubt and assume that we're going to get a lovely 50% retracement. Still hedged on that one, though. Well, I've got to go because I've got a class to get to. So I'll be back on Monday, same time, 7:50 for Frankfurt and 2:20 for the US session. Anything you need, I'll be in the Telegram group over the weekend. But yeah, we'll see how we go with these pullbacks today. Hopefully we get a pullback on this move because this NASDAQ move is way more aggressive than all the others. So it should pull back faster than all the others if it does. But there is a danger of this moving down. As I said, we've got much more downside here. So might re-hedge this. I've got to go out though. So I'll see what this does over the next 20 minutes. But yeah, just looking for some kind of pullback on this really, just to get out. But I will be out of it regardless at the end of the session, whether it's a profit or loss. All right, so have a good weekend. Anything you need, I'll be in Telegram. Other than that, I'll be back Monday, 7:50 for the Frankfurt session, and then back as usual, 2:20 on Monday for New York, assuming I haven't got COVID, obviously. So have a good weekend. We'll see you next week.